Hi everybody, this is Kyle Thompson with Tomson Burnham Real Estate. I am a real estate agent in Salem, Oregon, and this is my Living in Salem YouTube channel. I've lived in Salem for 25 years, and this channel is about sharing what I know about Salem with everybody watching. If you like what you see today and find it helpful, click on the thumbs up icon or write a comment. YouTube relies heavily on these metrics when deciding which videos to promote, so it helps people find us. Today, we're going to look at how the local housing market performed in the first quarter of 2024. There were some big changes in the industry during the first quarter, the biggest being the blockbuster NAR lawsuit settlement. I'm going to analyze the numbers and make some predictions about how the market will perform moving forward into the spring. So stay tuned. First, we're going to compare the first quarter of 2024 with the first quarter of 2023. We compare identical quarters because real estate does have seasons, and each quarter acts a little differently from the rest in terms of real estate activity. So comparing identical quarters 1 year apart takes out any variation caused by the time of year. Keep in mind that we are looking at the numbers for our entire MLS, which on top of Salem includes many of the other small cities near Salem. Our first metric is total number of units sold. As you can see from this chart, the total number of homes sold last quarter was 1,359 units, down 50 units from the first quarter of last year, or a 3.5% drop. Now, the first quarter of 2023 was in turn down over 600 units from the total number of units sold in the first quarter of 2022. So, just like the fourth quarter, where we saw an 18% drop year over year, the total number of transactions is now in a downward trajectory for the second straight year, albeit at a much slower decline than the fourth quarter. Interestingly, the total number of closed sales in the first quarter of 2024 was identical to the fourth quarter of 2023. Next, we look at median home prices. Median home prices, just like the fourth quarter of last year, have increased just a little bit, up to $435,000 from $425,000 last year, or 2.5%. Now, this is still below the historical average of a 3.5% year-over-year appreciation, but it is getting close to the historical norm. Still, it is expected to have a slower price growth after several years of much higher than 3.5% price growth. Bottom line, we had a huge run-up in prices in 2020 through 2022, we took a breather in 2023, and now in 2024, the market is behaving much closer to normal. The third metric I look at is days on the market. Days on the market has increased from a year ago. Days on the market has gone out to 77 days from 73 days from list to close. Now, normally, I don't have a lot to say about this metric because it doesn't change all that much. But days on the market has been trending outward for several quarters now, enough that this is starting to be significant. It is showing that homes are sitting on the market longer. Homes are now sitting longer on the market than they have at any time over the last 7 years. The last backward-looking metric we're going to analyze is the absorption rate. Absorption rate is measured in the number of days it takes to drop to zero inventory at the current sales rate. So, if there is 30 days of inventory, if no new homes came on the market, in 30 days, inventory would drop to zero. In the first quarter, the absorption rate increased to 84 days from 62 days in the first quarter of 2023. This is a pretty big increase percentage-wise. A balanced market, where there are an equal number of buyers and sellers, you will see an absorption rate of around 180 days. That said, jumping from 2 months of inventory to almost 3 months of inventory is noteworthy. We saw this same jump from the fourth quarter of 2022 to the fourth quarter of 2023, and the days on the market has gone out another 7 days from last quarter. So technically, it is still a seller's market, but I would say this. One of the things I notice as I walk through homes is that homes that are move-in ready, in good neighborhoods, not needing much of anything, they are selling fast with multiple offers. But homes that do need repairs or updates, they are sitting, and they are starting to sit for a long time, long enough that they're starting to skew the numbers. The days when you could just put a house up on the market and it sold because it was a house, those days are over. We are working with all of our sellers to help them get their homes in the former category rather than the latter. So let's take a look at some real-time data of the market as it stands now. This chart compares the state of the market in Salem alone on a daily basis. This first chart shows median list price over several years. The median list price of homes on the market has dropped from $539,000 a year ago to $515,000 today. Now, this is asking price, not selling price, so we can't read too much into this, but just like last quarter, what this clearly shows is that sellers are taking the higher interest rates into account and lowering the price of their homes right from the get-go. This next chart shows the percentage of homes with a price decrease. If you go back a few years to the real estate frenzy of 2020 through 2022, the percentage of homes that had price drops was very low, between 10 and 15%. As interest rates started to creep up, price cuts went up, and not that long ago, almost half of the homes on the market had at least one price cut. The percentage of homes with price decreases stands at 33%, slightly less than 36% at this time last year. Sellers may be selling their homes, but they are having to drop their prices to do it. However, fewer home sellers today have had to cut prices than 1 year ago. This last chart shows the strength of the market at different price points. Each one of these price ranges represents about 25% of the market. What is interesting about this chart is that the days on the market doesn't change much from the lowest to the highest price point. And this is a big change from even 1 quarter ago. The most expensive segment last quarter had twice as many days on the market as the least expensive segment. So homes are taking a bit longer to sell than last year or even last quarter. But the fact that the more expensive segment has seen a 45-day drop in the average days on the market, while at the same time the overall market has seen an increase in days on the market, tells me that it is the lower price segments where the homes are sitting longer. So what conclusions can we draw from all of this? Well, just like last quarter, the data shows the number of transactions decreasing slightly from last year, but inventory is still pretty low. Prices are starting to rise again, although they are still below their highs of 2022. And as I have mentioned in a few of my recent reports, it is the lack of inventory that is stabilizing prices. There's still not a lot to buy, which in itself keeps prices stabilized. Inventory is higher than a year ago, but higher interest rates are preventing the higher inventory from turning into higher sales. Higher end homes seem to be bearing the brunt of the high interest rates better than the less expensive homes, which is interesting because that hasn't been the case over the last 18 months. We'll see how that holds as the year progresses. Homes that are selling quickly have one thing in common. They are completely move-in ready. Everything else is either sitting on the market for a bit or the price is coming down. For buyers, inventory is tight and will remain so at all price segments. The more move-in ready a home is, the more competition there will be to buy. If you can take on a cosmetic fixer, you will be in a much better negotiating position. And for sellers, if you want to sell quickly at top dollar, it's important to make your home as move-in ready as possible. I'm working with a seller right now that is investing probably $20,000 into updating their home and fixing a pretty serious functional defect. They have taken all my advice to heart and doing everything I've suggested. But because they are investing this money, I've been fielding phone calls from agents begging me to let them in before it even hits the market. And at the end of the day, my clients will likely sell their home for $60,000 or $70,000 more than they would have otherwise and sell it far more quickly. With interest rates as high as they are, many buyers just aren't in a cash position to take on many repairs or updates post-close. I preview about 10 vacant homes a week, and I'm going into homes all over the city. The homes that are sitting on the market for an extended period have one thing in common. They need a lot of repairs, a lot of updates, or both. And that, folks, is my first quarter market report. If you liked what you saw here and want to see more, hit the subscribe button on your screen and you'll be alerted when my next video goes live. I'll see you next time.